TNTRadio.live.
The Bank of England has held interest rates in the UK at level in this the latest meeting that they've had of the Monetary Policy Committee. But here to discuss whether the Bank of England is sacrificing the pound in order to boost the property market is Mario Ineco, an economist and a contrarian, and he runs the Monaco 64 Twitter or X page, as well as his own YouTube channel. Mario, welcome to the show.
Thank you, David. It's nice to be with you again.
Now, you've been on the show before, absolutely. So it's really good to have you back and really good to hear your views, because you speak lots of common sense on economics, which you don't get on the mainstream. But you just made a video very recently about whether the Bank of England is sacrificing the pound to keep the property market afloat. What was the main point that you were making in that video, and how will they be doing that?
Well, and it's not just the Bank of England, like the Fed is doing the same thing to the dollar and the ECB. The main point is that the government and the Bank of England, they kind of manipulate, I would say, the statistics to show that what they call inflation, or CPI, is a lot lower. I remember back after the '08 crisis, when Mervyn King was governor, CPI was above 5%, but he wouldn't raise rates, and he kept having to write a letter to the chancellor saying why the CPI was 2% above the 2% target. Now they don't even talk about this letter anymore, and yes, house prices are continuing to remain quite robust. I saw the other day that Savills sees approximately 4.5% increase annually for the next 5 years. And you kind of wonder how is that happening if the economy is growing at less than 1%? Well, the way it's happening is they keep interest rates artificially low, and they do everything in terms of fiscal policy to help first-time buyers or existing buyers, and the Bank of England is desperate to cut rates, and I think they will this summer, because we've got 1.6 million mortgage holders who have to renew their mortgages they took 2 years ago in 2022. And if you look at interest rates in 2022, up until August, they were below 2%. And some people think that Jeremy Hunt has been able to bring rates back down after the Truss and Kwarteng debacle. But I just had a look at the chart of the 2-year gilt yield, and that's still at a level that was the highest during the crisis. So they're concerned. They need to keep interest rates as low as possible. And when you do that, you don't fight inflation, and the suffering, let's say, item is the currency, and they don't mind that, because the less the currency is worth, the less debts are worth, including mortgages. And that's why I said they're sacrificing the pound versus, to keep house prices going. And back in 1967, Harold Wilson devalued the pound by 14%. Versus the dollar. And back then, the dollar was as good as gold. And if you look at the price of gold this year, it's up more than 14% versus the pound. So very few people look at gold and in the context of money. So what we're seeing, yes, house prices are going to stay elevated in nominal terms, but in real terms, really the currency is going down the drain. And who suffers, I think, are savers and also young people, because rents are still really high, and they can't afford to save, to put anything aside, let alone try to buy a new property.
But is there a way out of this? Because, interest rates, I think the 5.25% at the moment is that's what they are, isn't it? I think. And if they go up, if they put them up, then you will put lots of people out of their homes, and businesses will go under because they can't afford higher interest rates on their debt. But if they go down, then that will devalue the pound, and then that means the pound in your pocket that you've saved is worth less. So whatever they do is going to have a negative consequence. I mean, so what is the best thing to do? I mean, is there a way where you could have, positive consequences all round without playing one thing off against the other?
Well, I think for the politicians and the Bank of England, the best thing they can do is to try to keep things as they are, keep
Right.
chugging along. The problem is that this has been happening, ever since I would say the late 90s, and it's a really bad habit, and they've created such a monster that it's really difficult to solve the problem. And if you solve the problem, it's going to be very painful. So this is the least painful way they can do it. But at the same time, it's painful because, the cost of living is going to keep going up. Young people are still going to find it really hard to get on the property ladder. I mean, there's another school of thought that says maybe also limiting the amount of loans being made by financial institutions that would keep inflation in check. But I just listened to a clip of Rachel Reeves, the shadow chancellor. She's planning, if elected, if Labour becomes the next government, to actually have people's deposits backed by the government. The Conservatives have had the policy of help to buy as well. So it doesn't look like they want to do anything like that. And the other thing, real estate or property prices are really important to the UK economy and to the banks, because it's a lot of the mortgages are, let's say, the homeowner's liability, but it's the bank's assets. So if you raise rates to bring house prices down, a lot of banks would probably be in big trouble. So yeah, they're between a rock and a hard place, unfortunately.
I mean, do we need a whole new financial system? I mean, perhaps going back to a gold standard like we had before. I mean, would that work? Because that's a radical idea, but is that the solution?
I think so. A system backed by with a gold anchor or even silver limits the amount of money governments can borrow, because they can't just ask the Bank of England to print £1 trillion, since '08 to buy their bonds. It really limits the how much government can do. Yes, I think it would help. It would be really good. And we would be in a world that's more sober. There'd be less borrowing and credit. There'd be more production and more, it would be more sober. Yeah. So I think, that would be a solution. But unfortunately, I think it was Alan Greenspan who said, because he was like a proponent of sound money before he became a central banker. He wrote in a paper in the 60s, Golden Economic Freedom, that the gold standard and the straitjacket it puts on borrowing and spending is the statists' biggest enemy. So I'm afraid unless we have a huge crisis and everything implodes, they're going to try to keep this train going, unfortunately.
So it doesn't look like there's much good news coming from the people that we've got in power in the moment. At the moment, either Tory, Labour, or the people in the Bank of England. So, well, we need a bit of a change, I think. That seems to be the conclusion. Anyway, Mario, thank you so much for coming on the show and talking about this today. Everyone obviously needs a strong economy, and we need the pound in our pocket not to get devalued too much so that we can keep buying things and pay our mortgages and so on. So thank you so much. Hopefully talk to you again soon.